Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome to this week's podcast of MuslimFin. I'm your host today, Fatima Parker, with my co-host Ali Salih and Siraj Busik. Today we are going to have a very hot topic to speak about, and that topic is Islamic loans. Do they exist? And I think, Siraj, you're the perfect person to answer that question. You know, with the tough economic climate that we're in, we find in the financial services industry, many people run towards loans. You know, they try to consolidate. As a Muslim, if I need to take out the loan, is there a Sharia option available to me?
Fatima, and Assalamu alaikum to our viewers. It's a very good question when it comes to Islamic banking and finance. Loans has become such a conventional product that most people utilize, whether it be credit cards, whether it be home loans or vehicle finance, or even loans for business, etc. But from an Islamic banking and Sharia perspective, there's no such thing as loans. So, to simplify it, probably the easiest way I could is if I gave you 100 Rand, I told you, Fatima, I'll be lending you this 100 Rand, but at the end of the month, you need to pay me back 120 Rand. The 20 Rand that's being charged, that is considered interest. And as we know from a Sharia perspective, paying or receiving of interest is haram. So there's no such thing as loans. So when it comes to Islamic banking and finance, and we look at the product offering out there in the market, people still require some form of credit. Whether it is to purchase a property or whether it is to purchase a vehicle, etc. So from a Sharia perspective, Islamic, there are products available, but it's based on asset financing. And what this means is there needs to be an asset involved at all times. So when it comes to property, the property will be the asset, the underlying asset. So from an Islamic perspective, it's not a loan, it's more asset financing, where they will finance the product and then will allow you to pay back, over a certain period of time. So it's quite complex, but we'll try to simplify it tonight. But just in general, the giving, the charging and paying of interest is haram, and that's why there's no loans within Islamic banking and finance.
Okay, excellent. Then
okay, so from mouth, Ali. No, go ahead.
No, great, because that just spurred on something in my mind. Sorry about that, Fatima. Just around the Islamic banking part. So what I wanted to get an idea of is so from an Islamic perspective, Siraj, can people then go out to the Islamic bank or Islamic banking window and apply for a Islamic home loan or vehicle finance? Would that then be the assets that you
yes, correct. So from an Islamic banking perspective, and alhamdulillah, in our South African market, we do have products available for home purchase as well as vehicle purchase. But what Islamic banking does, they use some of the Islamic principles that's been used by our Prophet Muhammad sallallahu alaihi wasallam. And some of these products are, and you will hear the terms, diminishing musharaka principle, the murabaha principle, and just to bring everybody on the same page. What Islamic banking does is they use a structure called diminishing musharaka, and what this does is it encourages home ownership while minimizing debt loads on people. So basically, it's a shared ownership in which both the bank or the financial institution and the customer become co-owners of the property. And this is a central concept of this unique arrangement. So the customer gradually acquires the financial institution's share through recurrent installment payments, ultimately taking entire ownership of the asset. And then the profit rate is fixed for 1 year at a time and is updated and adjusted annually in line with the client's approved pricing variables. So I know this is a lot to take in, but to give you an example, if you had to purchase a property of R1 million, and you had a deposit of 100,000 Rand, upfront already, that means that you own 10% of the property and the bank owns 90% of the property. And then over the term, and say you're taking the property over 20 years, the bank will sell you a share in the property on an annual basis. So every year you will get the opportunity to buy a share in the bank. So upfront, you've put down a 10% deposit. That means you're 10% ownership in the property. And then gradually, as you're paying your installments, you are buying the bank out of each share of the property until you come to a point where you have bought the bank totally out and you fully own the property, if that makes sense.
Yes, absolutely.
Yes.
So does that work for the vehicle as well, Siraj, for cars?
Correct. So Islamic banking utilizes different Islamic structures for different types of assets. So when it comes to property, and as we know, property is one of those assets that the market value increase over time. Whereas vehicles, it's a depreciating asset. You could buy a car today, but in 5 years' time, the car won't be valued at what you purchased the car for. It normally decreases over time. So when it comes to vehicle finance, they utilize an Islamic structure called Ijara principle. And what is nice about the Islamic Ijara principle for vehicle finance is if you purchase a vehicle, the bank will give you the money for the vehicle and allow you to pay it off over a fixed period, over the entire period. So if you're taking the vehicle over 5 years, you'll pay the same installment as your first month, exactly the same installment you'll pay on your last month. And literally over that period, you'll pay that up and that you'll become owner of the vehicle. So there's a lot of questions that it comes around the asset financing part. So how is it different to the conventional asset finance or the conventional home loans and vehicle finance? So on the home loan, generally you would go to the bank, apply for a home loan. The bank will give you the funds to purchase the property, and they will charge you interest on an annual basis. And they would use the interest rate. So you could purchase a property for R1 million, but by the end of your bond installments, you most likely would have paid double back to the bank. So you could have paid back 2 million, 2.5 million for your R1 million property, and that's because of the interest that is charged on that finance or on that home loan. On the Islamic side, as we mentioned, they utilize the Islamic structure diminishing musharaka, where the client and the bank goes into a partnership agreement. The bank then provides the finance for the property, and then the client then gets to buy a share of the property on an annual basis. So what happens is the bank sells a client on an annual basis, and then that gets divided over 12 months. So you're paying a fixed installment every month for 12 months. After those 12 months, they will renegotiate the share for the upcoming year. You will then buy that share for the upcoming year. They will divide it again over 12 months. A couple of things to note on this is that during the course of that year, right, you're unable to put in additional funds into your bond. You can only put it in at anniversary. What this means is if you're putting a lump sum into your Islamic home loan, this generally means that you're acquiring a bigger portion of share for that upcoming year. And obviously you're paying your bond up over a shorter period. But the client will have two options when they're putting a lump sum in the property. It's either to reduce the term of the property or of the home loan or the home financing. So you'll pay up your property over a shorter period of time, or you can maintain the term of your home loan. But then what happens is you're putting a lump sum in, you will reduce your installments, if that makes sense. But that is something that you will discuss with the bank at that particular time when you're putting in a lump sum. So I do understand that banks are looking to make it more flexible, because on a conventional home loan, generally you're allowed to put in lump sums whenever you want to. So clients might be getting their bonuses in August or in December, and the intention is to use those funds to plug it into their bond, so they can either pay up their bond quicker or they can reduce the installments. Whereas on the Islamic side, because you've bought the share upfront, that amount is then agreed upon upfront, and then it gets divided over 12 months. You pay a fixed amount for 12 months. The next year you buy another set of shares, and that gets divided over 12 months, and you're allowed to pay up that shares over a 12-month period. And so it'll go on for the entire term of your bond. But at anniversary, you are then allowed to put in additional funds, and then that would obviously be recalculated, and then you can either have your bond term reduced or your installment reduced as a choice at that particular point. And then the other thing on the Islamic home loan is that because you become a share owner of your property, one of the questions that always gets raised is what happens in a default? What happens when I can no longer afford the property? So the bank has certain protocols and processes in place, and it will follow the very similar process that conventional allows. So it will look at the banks and the financial institutions will look at trying to assist you by trying to restructure your bond, perhaps adding a few more months or years onto it to make it easier for you to pay off your bond. Alternatively, if that doesn't work, the bank will then check whether you are up to sell the property to pay the outstanding balance. And then if that doesn't work, the bank will then step in and say, listen, you owe the bank, and this is the outstanding amount. The bank will then get involved, sell your property, and they'll most likely auction it off to secure the outstanding balance. This raises a few question marks, especially from a Sharia perspective. How fair is this on the buyer? Because it does seem that then on the conventional side, that majority of the risk is on the buyer. Whereas Islamically, if you look at the structure on the Islamic home loan, because you're a share owner in your property, if it comes to a point where you cannot no longer afford your Islamic home loan, the bank will try to assist, but if it gets to a point where we would need to sell, the bank will need to sell for market value. And as I mentioned before, with property is one of those assets that appreciates over time. So you could purchase your property today for R1 million. After 19 years, your property could be valued at 1.5 million. But also after 19 years, you could be 50% shareholder. You could own 50% shares in your property. In the event of a default in that example, what would need to happen is that when the bank does sell your property, right, the bank would need to pay out your share percentage that you own in the property. And this could mean that you could get all your installments back, if not more, because of the appreciation of the market value of your property. So in essence, the clients are a bit more protected when it comes to Sharia banking and the Islamic finance of property and assets, as opposed to conventional, where on the conventional side, the clients be majority of the risk when it comes to property finance or home loans.
Shukran, Siraj, for explaining that so eloquently to us, because I think as a property owner myself, when I originally had bought a home, I didn't know that there were options like Sharia home loans or vehicle home loans from a Sharia standpoint. So it's absolutely wonderful to hear that we as Muslims have other alternatives to the conventional home loans and Sharia. And so what I do understand now is that from a normal loans perspective, Sharia banking does not offer this because it is interest-based. Whereas Sharia banking does, however, offer asset-based finance. And like we know, our homes are assets and our vehicles are assets. Ali, do you have anything else you wish to add?
No, I agree with you, Fatima, because that was very well explained in terms of, and I think very few people actually know, firstly, well, there's a lot of people that don't know that there are things like an Islamic home loan or Islamic vehicle finance. We appreciate you going through the different contracts that are linked to the various types of solutions, Siraj. So the diminishing musharaka for the home loans, and in the ijara, contract for the vehicle financing. And then what's very interesting to me, is quite mind blowing, is that that additional protection that you get on the Islamic banking side. Every time that I'm part of this podcast, I'm more and more amazed by what's actually available to us. And I think we just want to thank you, Siraj, for sharing that with us. I think there's probably a lot more of this types of conversations to go. Yeah, so that was what I wanted to say, Fatima.
No, 100%. I think what we find is that a lot of our people have heard about Islamic banking. They know it exists. They've seen the Islamic banking windows, which are, as we've mentioned in our previous podcast, where we have your conventional banks that offer Islamic products. And they may have come across some ads or campaigns where they've seen Islamic banking, but very few people understand or know what products is offered by Islamic banking. And then, moreover, people don't understand how it works. So, what is the difference between the Islamic banking and the conventional? How different is the home loan? And a lot of questions are around the home loans. And we could spend probably another 3 or 4 podcasts just unpacking home loans. Questions like, so how does the bank actually make money if we're not charging interest on a home loan? And that's, we can have the discussion around the profit sharing, and we can touch on things like, okay, cool, so what are we basing the profit margin against? How do we compare the Islamic home loan to the conventional home loan? How easy is it to apply? And a lot of people think it's actually a difficult process, but it's actually as simple as conventional. So remember, a lot of these conventional banks that do offer Islamic banking, there's a benefit for our Muslim community in that is that because they're offering an Islamic product, we can then utilize the existing infrastructure that these banks have. So whether it be ATMs, whether it be banks, whether it be bankers, pricing comparisons, product offerings, etc. But just from a homeland perspective, and what we've seen is that in the South African market, we've come a long way to a point where our Islamic home loans are priced very competitively with your conventional home loans. We cannot compare, the Islamic home loan to the conventional home loan purely because it's structured differently. They use an interest-based system. We use the profit margin, so it's difficult to compare. But from a pricing model, and we live in a society or at times where it's tough for everybody out there. People want to bank Islamically, but they also want to, they don't want to be charged hefty rates or interest, or they don't want to be on a back step because they want to bank Islamically. It's going to cost them more. Alhamdulillah, so there's been major strides within Islamic banking to make the products not only to be able to offer products that compare to the conventional in terms of direct alternatives to your check accounts, investments, vehicle finance, and home loans, but also very competitive from a pricing perspective. So if we had to compare an Islamic home loan to a conventional home loan, the pricing will be very similar. The only difference is you could sleep better because you're not involved in interest, paying a profit share. There's a profit margin. You understand what you're paying. So you know, part of the Islamic banking is that there shouldn't be any gharar or maisir. There shouldn't be any doubt in terms of the fees or what you're paying. So those are discussed upfront, or it's in your contracts. I know people don't read contracts, but it's in the terms and conditions. It is there. And a lot of people don't know is that previously, I'm talking about our parents and grandparents, they never had the opportunity to bank Islamic. There wasn't these options and Sharia-compliant solutions available to our parents and grandparents. Alhamdulillah, we living in a time where we have these options and access to Islamic banking options or products. But speaking about that is that, if we look at how far we've come in terms of the product offering, we can now literally almost find a Sharia-compliant alternative to every conventional product out there. So inshallah, there's still a lot of work to be done within Islamic banking. We want to see more innovation when it comes to home loans, making it more practical, making it more innovative, flexible for our clients, where they could put in money, take out money in the event that they perhaps want to do some renovations. You could access some funds in your bond because, like we said, property is one of those assets that appreciates over time. So after a couple of years, you could actually access that additional money between your outstanding balance and the increased market value. You can actually access that portion. And again, we could probably have another podcast around that aspect of the Islamic home loan. But from an application point of view, it's very similar to conventional. You do an application with a bank. There isn't a different credit criteria when it comes to applying for an Islamic home loan versus applying to a conventional. You still have to follow the processes in terms of you should be able to, you should be by the means to afford the finance, first of all. If you can't afford it, unfortunately, you will not be able to get it. So you should be able to afford it. They will look at your banking activity and your profile in terms of what type of client are you? Do you pay up your debt regularly, on time, what type of client you are, how much debt you do have currently, and taking on more debt. So all that credit criteria that they would look at from a conventional side will apply to the Islamic home loan, but where the difference is the backline and the contracting and the structure of the home loan that makes it Sharia compliant. So yeah, inshallah, we can perhaps expand on that at another podcast, inshallah.
Shukran, Siraj. So that's actually it for tonight from the MuslimFin team. I would like to ask our viewers that if there is a topic that you would like us to discuss or to go into or to further delve into, please email us at info@muslimfin.com and also like and subscribe. And yes, and then that's it from us. Assalamu alaikum. Until I see you again next time. Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum salam.
Wa alaikum salam.